Every bull market eventually ends, but the truth is, nobody can predict exactly when that will happen. This uncertainty is the core challenge. Timing the peak is impossible, so preparation matters more than prediction. Some experts forecast 2026 will bring the biggest rally ever, while others warn a massive crash is on the horizon. The real question is whether a crash is coming in 2026, and more importantly, how smart money is positioning itself right now. Today, we're diving into whether 2026 is a warning sign or a golden opportunity for prepared investors. Welcome to Money Mastery, where we guide you step by step toward financial freedom and lasting wealth creation. What professionals watch and how you can prepare are equally important. You can stay informed and proactive instead of panicking when markets shift. Market crashes don't appear from nowhere. Let's explore why people fear them and what actually triggers these dramatic downturns. When valuations stretch too far, speculation explodes, debt piles up, and overconfidence takes hold. All these forces converge to create the perfect conditions for a market crash. During these euphoric periods, risk silently builds beneath the surface, hidden from most investors until it's too late. Smart investors don't guess. They watch for classic warning signs that signal trouble ahead. It starts with overvalued tech stocks, which fuel excess leverage, triggering retail FOMO spikes that lead to credit stress and finally liquidity tightening. Here's the truth. Crashes don't start on charts. They start in behavior, in the collective psychology of market participants. Now let's challenge a common myth about what actually happens when markets crash. Crashes destroy weak portfolios built on hope and hype, but they reward prepared investors who position themselves strategically. Even during crashes, some sectors survive, certain assets actually rise, and fortunes are made by those who understand the opportunity. So how do sophisticated investors prepare for downturns instead of panicking when they arrive? They hold cash, rebalance risk, rotate sectors, hedge exposure, and wait patiently. 5 defensive moves that form their crash playbook. The key difference is mindset. They treat crashes as opportunities, not disasters. You don't need a crystal ball or insider knowledge. You need the right mental framework for navigating uncertainty. Forget predictions. What matters is preparation, the discipline to act when others freeze. Build your foundation on 5 essentials: discipline, diversification, patience, risk control, and liquidity. Remember, the goal isn't avoiding crashes. It's surviving them and profiting after them. Let's hear from you. What's your honest take on where markets are headed? Do you think a crash is coming in 2026? Yes, no, or not sure? Before we close, here's the one truth every investor must accept about markets. Markets will always rise and they will always fall. Both are inevitable, natural cycles you can't escape. But only prepared investors stay wealthy forever, turning volatility into lasting advantage. If this helped you think clearly, hit like and subscribe to support more content like this. Up next, we're diving into a crucial topic for anyone managing investments: how to protect your portfolio before a crash happens, with a step-by-step guide you can follow. Thanks for watching, and I'll see you in the next video.